One of the things that people get very confused is when you come at the end of the year and we tell you that you made a good profit, and you look at us and say, hey, I don't have any cash in my account. Where is that profit? What happened to the profit? There is a huge difference between a cash flow and profit and loss report. So when we talk about profit, it's everything that has happened when it's been invoiced. It's going to be in the profit and loss report. So if you have account receivable invoices at the end of March, that is there, that's going to be your income, even though that you haven't received any money. So cash hasn't come through, but that's income. And same with the expenses. So if you have any expenses there that it's been invoiced, it's going to be calculated as expense. Also, there are lots of other things that it doesn't come to the profit and loss report. So when we calculate profit, your drawings is not going to be there. So if you take money out of your bank account, it's not going to be there. If you're paying principal of a loan that you're making payment to, that money is not expense, so you're still making profit. You're paying off a loan that you had. So that profit, that principal, it's not going to come on a profit and loss report. The other thing that usually people don't realize is the asset they purchase. So if you purchase a couple of big assets on that financial year, the full amount of that asset doesn't come as expense and profit and loss report. So you still, let's say your turnover is $1 million, you purchase $500,000 of the asset, and you have about $300,000 of the other expenses, the operation expenses. So 1 million minus the 500 minus the 300, it doesn't leave you with the $200,000 profit. It's a lot more than that. Depends on what sort of asset you purchase with that $500,000, and what sort of depreciation rate we can claim on that. The only thing that comes off as expense is the depreciation rate for those assets that you purchase. So the rest of it, you paid cash, and the cash is not in the bank. So that's why you don't see the cash in your bank, but you're still making a good profit. So it is very important to look at your cash flow and look at your profit and loss report. These are the most important reports that you have to have a look as a business owner to make sure that you have enough cash in the bank to pay all your bills, and you're making a good profit and having a healthy business in your hand.